Welcome back to the best prop for you trading flow. Today we are breaking down the British pound, which actually is breaking down under heavy pressure. The driver is simple: divergence. That is UK weakness. Tuesday's job report showed average earnings dropping to 4.2, way below expectations. Inflation data also confirms month-on-month deflation. The market is now pricing in a March BOE rate cut. On the other side, the FOMC minutes just yesterday were hawkish and they boosted the dollar. This mix of a softening UK economy and a stubborn Fed gives us a clear directional bias. If you're trading at prop challenge, this is the trend you want to align with, but only if you respect the technical levels. So let's jump straight into the charts. We're looking at the 4-hour chart and we're looking at expanding Bollinger Bands and the setup, of course, on the 4-hour. It is important to remember that when the Bollinger Bands, the upper and the lower, are expanding and the middle one is following the one towards the breakout trend, which at the time is to the downside, then this is confirmation of continuation to the downside. The middle band is at 135.70, and this is the line in the sun for us. As long as we are trading below that level, the bias remains down. In the shorter term, we have this swing support at 135, a psychological level, and a level that was already retested once. So we're going to go and pull that out and ensure that we remember that as long as we are also in the shorter term below that level, the bias is to the downside. This is our wall and round number, and it flipped to resistance. So momentum on the 4-hour is something that we have to remain cautious about because it shows some support and we are in oversold territory. So a retest of the 135, it's possible. But unless we break above the median line, any rally is going to be a selling opportunity. So where are we going from here? Well, one way to see where we are going is to use the Fibonacci projection. If we measure the previous leg down and up, given the pullback to 137.13 or so, we are looking at 133.50, excuse me. This is actually pretty much the previous low that we have seen back in the middle of January at 133.50, where we saw prices moving all the way up. Okay. The 100 Fibonacci extension is, since we've already crossed below the 61.8, is our target. It also, interestingly, aligns perfectly with the daily chart, and that's the power of multi-timeframe analysis. If we look at the daily chart, we're going to see that the RSI has crossed below the 50 line. It's currently around 40, but there is room to go down to 30 in terms of momentum. But as I said, most interestingly, the lower Bollinger Band comes exactly at 133.50. So this immediately becomes a magnet zone and is going to probably attract more sellers as well as buyers. Okay, 1, 2, 3, 4. Today will be the 4th day in red for the pound. And given that we are also below the 136 level over here in the medium term, okay, then this could again come lower down, retest the support, perhaps even move down to 133, and then depending on where momentum is going to sit, and then we could be looking for a potential bounce to the upside. So how do you trade this without blowing your best prop for you challenge? Don't chase the low. Wait for price to come to you as a resistance. Back on the 4-hour chart, we are at 134.50. Okay, so the 135 would perhaps be a potential entry. Now, if you want to play it aggressively, that's still okay. The risk to reward ratio is still favorable to the downside. Now, when it comes to the stop placement, you can have a tight stop just above, like 20 pips above your entry, or I would go for 50 to be fair, or a conservative. You would use the median Bollinger Band as your and your stop loss. But obviously the risk reward in this particular case isn't that great. So taking profit in any way though would be the 133.50, and if that breaks, 133 is going to be next. But banking profits at high confluence levels is how you consistently pass evaluation. At best prop for you, we trade probability. The probability here points lower, but only if you manage your risk. So watch the 135 resistance and that 133.50 downside target that also aligns with the macro data as well as the longer Fibonacci, Bollinger Band that points to the same level for the bear case. And the technicals now are giving us a clear roadmap. Stay disciplined, keep your stops in place, and trade what you see. This is best prop for you. Trade smart.